But the timer ran out. It's time to start. Just came back from the gym and had to get myself a shower. But here we are. What's up, everyone? Good to have you here. Let me pop out the chat and put it on my screen as well, and also shut down the music. Okay, there we go. And let's get into it, shall we? Let's get into it. Poof, that's the shortcut that I need. Open the chart. There we are. Make sure that my screen is bright. And also make sure my glass is filled. Miss the music. Yeah, I heard it a lot when I did my first live stream when I came back. So it's like the intro, the two intro songs of the live stream are, you know, a bit of like a theme song now, especially the second one from Jim Joseph. It's like a theme song of the channel, you know. Koen's busy shutting down all his market maker bots. Odin, I'm sharing stuff with you as a moderator that I cannot share with the rest, right? It's a joke. So, okay. First in the chat, Perko, welcome. Good to have you here, man. J Trader, number 2. Where is the music? Rahul, welcome. Are we gonna get swole Koens? Yeah, Odin knows. Wait, when did I say that I was going to the... Oh, I said it in the updates, right? In silver, that I was in the gym. Yeah, I did core though. I did core. So I did my core, front, back, lower back, and sit-ups at the front. So, but sit-ups with your, you know, your legs elevated. So more leg support. And then I also did the, what's that? Like the, I don't know all the names. You know, I just know the exercises. You're sitting sideways and you push straight. So you work on your, you're working on your sides, right? And core, and then also back, right? So those are the areas I focused on today. Actually, it was lower body day. The issue is that through snowboarding last week, I still have a little bit of a... I don't have pain in my knee, but there's a feeling in my left knee that it's not... I don't know, it doesn't hurt, but it does avoid me. Like I can't yet sprint, for example. So I just got to make sure that my knee recovers. Not that I broke anything or torn down anything or whatever, but something's not comfortable. I don't really know what it is, but I know that I want to rest my knee. So that's why I focused on core. So, yeah, it's, you know, good stuff. Always enjoy going to the gym. Polar Bearman, what's up? Hope the snowboarding has been awesome. It was. I actually forgot to show videos about it. Maybe later in the live stream, but we have an hour. We have, well, 50 minutes now, of course, because of the introduction. But, you know, at 8 p.m. Central European time, I have to go off again. AJ, welcome. Sam, what's up? How is your knee, Sam? It's always the knees, man. When snowboarding, how you doing? It was a lot of fun in your home country, man. I love it. It's so calm, so beautiful. I love it. And Bitcoin Forever, welcome. Misha, what's up from Russia? Good to have you here. Good to have you here. Is Russia the biggest country in the world? Was it? How is the Bujo going? I don't know what you mean, Perkil. I don't know what you mean. Tino, welcome. Ready when you are to discuss the inexplicable Bitcoin. Yeah, I mean, at the moment, look, I can be very, very simplistic. Like the very short, simplistic explanation is, okay, cool. With the polylines, we were looking for a move down. Honestly, it would have been nice if we actually touched the resistance here. It's just one of my boxes. But as you can see, all the polylines that I showed this morning were looking for a move to the downside. So it's nice. It's nice. It's nice. Yeah, it's nice. Having a move to the downside didn't touch the resistance. But okay, you know, we expected a bit of a move down at least. And then basically, in a nutshell, you want to know the conclusion of today's live stream. Is this corrective or is this impulsive? That's the only thing you got to know, right? So, and at the moment, we need a bit more time. So hopefully, maybe during the live stream, we get more information. But impulsive or corrective, 1, 2, 3, 4, 5, correction and another move down. or is this a corrective and we look for price to move towards the upside? That is what's going to impact probabilities of these polylines. So that is why I also like to update at least once a day, twice a day, because with new information comes new things to explain. And this morning, polylines looking for a move down, get a move to the downside, but then the move to the downside is what is going to impact the probabilities of the individual scenarios. So that is what we're gonna look at. I do have some local stuff here, but that's basically, of course, the analysis in a nutshell. But we'll get in a bit more detail in a little bit, right? Where were we? Werner Vrijens, welkom. Goed dat je bij bent. Omar, what do you think of calisthenics? Yeah, I got to get into it, actually. I should just do like a daily goal with push-ups, sit-ups, and other exercises. It's all about repetition. I think calisthenics is incredible. I have a friend of mine, Yip. He was with me skiing, and that guy is massive. He is strong, and he does pure calisthenics for 4 years now. And if you look at a before and now picture, like 4 years ago and how he looks now, you won't even recognize him. It's not the same person. But he also eats a lot. Like his growth has been incredible. And that's my biggest challenge. I'm good in doing consistent sports. I have a plan. I do a lot of sports. It's the eating. Not that I don't eat unhealthy. I just don't eat enough. I actually probably need to go to 2.5, 3K calories, and then of course have enough protein for the weight that I want to achieve. And I think that is where my growth is stagnating. So I got to focus more on food, instead of exercises. Careful with the knees. Yeah, Francisco. I know. I know. Jen, welcome. Good to have you here. Glad you're in the US and that you're back safely. Thank you, Jen. It was a good trip. Can all do exactly, Odin. I lived most on the charts. You know. Crazy Potato, welcome. Your next channel can be called Koen's Training. yeah. I need. I'm not a fitness instructor or something. My buddy. We're doing a little chatting. We always do that when we just start the stream. But that same friend of mine, Yip, he is so good in calisthenics and he knows all the exercises. And he was with me, and we had a big villa with many people. We slept in the same room, so we had a discussion about business and how he could implement or execute on his knowledge, his experience, his food, his calisthenics, and how he can move that into a program or business, like something, right? He is entrepreneurial, but he doesn't yet have a business. But he has the wish too, you know what I mean? So we spoke about that stuff, and if I can help him in any shape, way, or form, I'm happy, of course, to do. Like I'm already helping, so I'm happy to support him in his journey. And if he would have a great app or a training or whatever, then I can always share it for the people interested. Bullet journaling. Yeah, of course, it's a green journal. That's my bullet journal, by the way. No power despite 6 week crunches. So happy and working on it. Okay. Yeah. Keep on gymming. Yeah. Gotta make it stronger, right? Yeah. Always. If you have a pain and for a period of time you can't do anything, muscles get weak. Start with high reps of an easier exercise, but have reps with longer duration of muscle stress. Okay, high reps is generally no problem for me. I'm good in endurance. Yo, if anyone does calisthenics, hit me up in Discord in questions to Koen or just DM. Yeah, I'm interested. Eric, welcome. Bonjour, ça fait longtemps. Yeah, but je retourne or whatever. I'm back. Mohammed, welcome. Ivan. Okay, let's start. I already kind of gave a summary of what we are looking for. But let's at least cover it in a little bit more detail. Gonna move my fixed range up. So this is of course, like I suppose for me it's an evening live stream, bit of a different time compared to usual. But you'll notice that if something happens on the chart that is worth discussing, I'll be there. If, however, after a morning update, nothing really changes, then I prefer to spend my time doing stuff in the background, which in the end will help you because it is stuff that will be published later, or it's content for later, or it's the compendium book or whatever, but I can better spend my time. So yesterday I didn't do a live stream because literally nothing compared to the morning video changed. We were looking for price to take out these highs, price took out the highs, you know, nice. But that happened, of course, when I woke up today. I saw price over here, and then there's something new to say, right? So yeah, I gotta manage the time. But anyway, let's remove this. Okay, and let's get into it, no? So let's start with the lower time frame. And the first area of support, 83.2K here on my chart. That's the point of control of this volume profile here. We have a value area low at 81.9. With regards to PVP, there's also another point of control here. So around 82, bit of support as well. But the first area would be 83.2 here on my chart. We have now, of course, entered the volume profile of this range. And from a range trading perspective, this is then called a deviation. And then the probabilities are high to at least move to the point of control, which is the middle of the volume profile. Of course, one can maybe retest and move down. Doesn't matter how it does it, but it's interesting to keep an eye on the point of control. If the point of control fails, one generally would be looking for the value area high. That's basically how, of course, range trading with a volume profile works in a nutshell. And locally, or at least on a 1 hour time frame, I'll shortly, of course, I did the summary just now, like basically conclusion. But this was from the morning, right? So this is the probabilities from this morning, the polylines from this morning. And you can see how all the polylines moved to the downside. And that is most important. Expecting a retracement to the downside was the highest probability in the morning, right? The blue polyline also for a double zigzag. Looking for a retracement. Honestly, of course, like the polylines is a representation of expected price action based on the scenarios that I share. Of course, it doesn't necessarily mean we have to hit resistance. I personally would have loved it if price would move up just a little bit more and actually touch the resistance and then move down. But nonetheless, knowing that the probabilities were higher to get a retracement should make you wary at least of a move to the downside. And maybe we're not going to get this little bit here before we actually get the move to the downside. And that's, of course, what happened. So yeah, my personal favorite would be to hit this, get this resistance, move down, move up, bearish CVD, and then move to the downside. But instead, we already moved down here. No problem, right? What's most important is we knew the probabilities were higher to get this retracement here, right, with regards to all of the polylines. And that is what's important with regards to directional bias. That is what Elliott waves gives you. And then based on personal plans, strategy, and whatnot, you can try to execute on some trades like Sam did. Sam, apparently, he's in the chat here, Samuel, he shorted the tippy toppy. Yeah, very, very nice, well positioned. Now, what is most important now is if this structure is either corrective or impulsive. Let me explain what I mean. So you can see the different polylines, and the polylines represent these four folders. So let me go through them one by one so that you understand what I mean with, is this corrective or is this impulsive? Because now, if we want a long, I'm not a financial advisor, but this is how I approach my trading. No? If I want a long here, I need a bit of confirmation that this is corrective. In other words, I need to see signs of strength locally, right? Get me some signs of strength. Give me a proof of corrective structure here, right? That this is corrective. And then I'm happy to go long. No? Happy to go long. So basically, that's what I'm waiting for. Now, with regards to the scenarios, right? Corrective or impulsive. This is the double zigzag. A W, if X finishes here, you would look for another A, B, C to the upside, which means that this move down has to be corrective. Has to be a three-wave structure. And then you want price to move back up. Preferably, of course, take out the high or hit the 886 here. That's fine as well, taken from this high to the low. But at least give a higher chance, higher probability. This is corrective. If so, we look for price to take this high, hit this resistance, pass this resistance, then look for 93K. Right, so that would be something that I am interested in. So if price, I mean, I would like price to actually move down a little bit further. So if price can up, bloop, right, hit the point of control. If we would move up and then touch the 886, then at least I am interested, right? Preferably, I also see some other things as price is moving to the upside. So it's not just an 886, but I am very happy to look for something like this, right? And then as price moves towards the upside, we reject TP1, maybe look for rejection. If there's more signs of strength, flip. One can always add and look for continuation to improve the RR. This is all just, whatever, depends on your plan, strategy, how you trade. But this is a way like how Elliott waves, of course, gives you a directional bias. Cool, right? 886 touch, probability is higher than to take out the high, look for signs of potential entry, no? So at the moment, we just moved up. Got to be patient, But for the blue line here, this has to be corrective. For the blue dotted line, this has to be impulsive, right? Which means 1, 2, 3, 4, 5, find support. And then what we want to see is an impulse to the upside, right? So we also want to see a 5-wave structure up, 3-wave corrective down, 5-wave up. And this is incredibly important. This has to be an impulsive structure, which is going to be different in the bearish scenarios where this has to be a corrective structure. But for the quote-unquote bullish scenario, WXY is still bearish. But for a scenario to look for higher, we need an impulse up. If you do take out this low, you need an impulsive structure up. If we get an impulse up, guess what? I'll be there. I'll be there. I'll be longing that 3-wave corrective structure. 5-wave up, 3-wave down, interest, stop loss below the low. Look for price to hopefully then move to 93, TP1, TP2 or close. Right? So it takes a lot of patience, but that is trading, right? I think one of the best skills to have as a trader is patience. Let the chart come to you, right? Don't follow the chart. Let the chart come to you, right? Be very, very patient in your trading and in your execution. I'm a very patient trader. My style will not fit for everyone, but it will fit for some people, I suppose. No? So it requires a lot of patience, but I prefer to have more probabilities on my side and be sure that my RR might not always be great, but I prefer to win instead of lose. And I am very happy with a 0.5, 1, 2, 3, 5 R, depending on the setup, sometimes 0.5, sometimes 5, sometimes 10 R. It depends on how the chart eventually moves in my direction, but I prefer to win compared to losing, right? So of course, the second thing is trade management. That's on you. So WXY, is this corrective or impulsive? Needs a little bit more information. I have a count here locally, which I'll share in a second. It's called Group 1. Didn't give it a name. Okay, very nice. Now, if you're wondering what kind of support is in the blue box below, I'll just open my folders here for you. Remove the red lines so you can actually see it. There you go, right? So it's quite stacked. And we haven't hit any of these levels, interestingly, because price decided to move to the upside just before hitting the box. Will we hit the box, yes or no? Again, we just got to wait if this is corrective or impulsive, right? If impulsive, hit the box. If we get an impulsive move towards the upside, 1, 2, 3, 4, 5, waiting for a 3-wave retracement, perfect. Poof. Okay, very nice. Then the bullish scenario, wait, not the highest probability scenario. I'm going to cover it anyway. So this is the bullish scenario, not the highest probabilities. I just want to cover it for the sake of covering it, I suppose. 1, 2, 1, 2. This has to be another 1, 2 now. And this second wave 2 is a lot longer than the first wave 2 in time, right? The white wave 2 is about 3-4 times longer compared to the blue one, which is not ideal, lowers the probabilities for a multi-1-2 as preferably your lower degree wave 2, which is the white one. Blue count is your higher degree count, 1, 2, 3, 4, 5. Inside 3, lower degree, 1, 2, 3, 4, 5. Finish white to finish blue 3 and then blue 4, 5. So preferably your wide 1 and 2 are shorter in time and price. That's not the case with your wave 2. Low is the probabilities, invalidation is the low. Not the highest probabilities, but also here, if you look for another 1, 2 though, you still want this to be corrective. So if you get a corrective structure down here, there is still the potential for a 3. It's just probabilities would be higher to look for a double zigzag though. If this is corrective, right, wait for a bit more information. If price moves up, hits the 886 over here, or takes this high, get a retracement, pretty much confirmed corrective structure now. We look for another move up. Probabilities are higher. You're looking at a wave C compared to a wave 3 and continuation. It's just Elliott waves probabilities, which then is important for the risk management of a potential trade. Right? So if you do get a three-wave move down, you hit the point of control, price moves up, changes structure, generally get a bit of a bounce. It doesn't happen often. Price goes up in a straight line, and then look for an entry. And then eventually, with regards to probabilities, we know, okay, probabilities are higher. We look for a wave C. So that means that taking profits becomes a lot more important as the probabilities are lower for a wave 3. If we're looking for a high probability wave 3, then I would hold. I would wait for 3, 4, and another 5. But now for a wave C, I'm like, well, cool. I want to just get rid of my trade, right? I want to take my profit, be out of the market before it turns on me. And that is why I then have the resistance areas, no? Okay. Then we get to the third setup. This is your most bearish scenario. So that's a finished WXY. And also here, like, I am not interested to snipe highs, right? This was higher probability corrective. So guess what? Couldn't enter the long. I said it in the live stream, the previous live stream, which maybe even the previous video, but for sure the previous live stream, I mentioned that if we get back inside this range over here, right, I'm interested for a long and price to at least take out these highs. Now, again, for me, it would have been nice to hit resistance, but no, we rejected bearish CVDs. Enough reason for a little take profit, but still not interested to short. I'm not someone that snipes highs or snipes lows. So in this scenario, what are we looking for? Okay, well, this is the most bearish scenario. From a time and price perspective, we could say, okay, yeah, there is at least, let me just get this in just to show you, because I didn't have this one on the chart. We can at least give it some probabilities because we don't have a WX. This has to be your wave Y. Wave Y is short compared to W. You need a zigzag in this structure, right? So in this move to the upside, there's a zigzag hidden. Now, interestingly, you can see that this move up has a lot of overlap in a way. You can see many red candles, right? Up, down, up, down, up, down, up, down, up, down. You can see every time there's like this red candle. Here we get a little push, right? So in an impulse, we preferably like to see 1, 2, 3, 4, 5, right? And then a clear impulse in the 3. And here it's very messy, right? So yeah, there is a chance to count this as a corrective structure. And in a most bearish scenario, that's your Y. Y finished after the 382 fib time, taken from the start to the end of W to the end of X, comparing W with Y. Minimum target for Y is the 382, and the high is made just after the 382. Minimum target for Y is the 0.618. Minimum target has been hit. Now, what is the most common target for Y? Common target for your Y is around a 1-to-1, which was actually the 22nd of March. That's time. Common target for Y with regards to price is the 1 to the 1.236, which is up here. So you can see that the common targets haven't been reached from a time and price perspective, but the minimum targets have. Therefore, you cannot, I don't know, you cannot, this is not good English, but you can't forget about this scenario, right? You can't just put it away and be like, I can't give this any probabilities. No, you can. Minimum targets have been reached. In this scenario, what do we need? We need an impulse down, right? So we want to see a 1, 2, 3, a 4, and a 5. Wave 4, preferably similar in size or longer compared to wave 2. Right? Most commonly, wave 4 is bigger in size than wave 2 in time. So 1, 2, 3, bit of a longer 4, and a wave 5. Three-wave corrective. This is the difference. Remember? Wait. This is important. Remember what I told you here? The blue line, the blue dotted line is also an impulse 1, 2, 3, 4, 5. But after then hitting support, you want to see this low taken preferably. You need an impulse up. 1, 2, 3, 4, 5. Correction down, three-wave structure, continuation. That is different compared to the bearish scenario. So, you got to know the differences and how probabilities change. In a bearish scenario, we also look for a five-wave structure down, 1, 2, 3, 4, 5, right? And then the move up is going to be corrective. It's going to be a three-wave corrective structure. And then you look for continuation down. So is this corrective or is this impulsive? Has an impact on the probabilities of continuation up or falling to the downside. Now, how to approach this then, again, from a more like trading point of view? Well, in this case, right, if we do get a five-wave down, so I am not in a position short here, right? So 1, 2, 3, 4, 5. If we do get an impulse down, then I just wait, right? I wait for an impulse to finish. Where is the impulse finishing? Does it take this low? Yes or no? If it does not take out this low, then it means that if this is an impulse, which did not take out this low, probabilities decrease for a flat because it's a running flat. It might be a lot of technical information, but I'm trying to explain to you how probabilities work, how Elliott waves change as new info comes in, and how to make the best of it, right? So if you end the impulse here, not taking this low, then you would, in a bullish scenario, count this as a running flat. But a running flat is the rarest flat structure. Most common is expanded flat, take out the low. Regular flat, take out the low. Running flat does not take the low. So if you finish a five-wave structure that does not finish the low, it automatically increases probabilities for this impulse down to be a wave 1 or A. It lowers probabilities this move down is a wave C. Because a running flat is the rarest flat structure. A, B, 1, 2, 3, 4, 5. Wave 5 here, this wave C. Let me clean up the chart. So we have our wave A, we have our wave B, 1, 2, 3, 4, 5, wave C. Wave C doesn't take the low of A. Running flat, very rare, never preferred unless everything else fails, which means that if this turns into an impulse that doesn't take out this low, probabilities are higher. This is a wave 1 or a wave A. Now, I cannot trade this, right, from the get-go. So when we finish a five-wave structure, I want to wait for the reaction to the upside. So we have a five-wave move down. Even if we do take out this low, right, then you still don't know, is this a wave C, A, or a wave 1, right? Got to be patient. Got to wait for price to take the low, look for the move to the upside. So how do we trade it? Well, we trade it based on the next move. 1, 2, 3, 4, 5. If this turns out a corrective structure, I'm shorting. Right? Official invalidation is the high, but whatever. And then I look for price to move to the downside. Because the minimum target is going to be taking out this low. If this is a corrective movement, either a triangle, WXY, flat, or a zigzag, I'm short. And then I look for at least price to take out this low, and preferably per support area that I have identified, I TP or I manage my trade. I got to manage my risk, got to manage my size. If, however, this move up is an impulse, I am not FOMOing here. I'm not sniping the low with my long. I don't care. Price is slowly moving here. I wait for a corrective structure. Three-wave correction. We don't know how big this move is. It can be a small move, right? 1, 2, 3, 4, 5. Correction. If this is a five-wave move up, right, we will be able to identify it. 1, 2, 3, 4, 5. If we get a corrective structure down, guess what? I'm long. And I am looking for price to hit some of my resistance levels, and I manage my trade accordingly. So that basically means that if price forms a five-wave move down here, I will need to be more patient because I need to wait for this move up. And depending on the next move up, I will make a decision going long or going short. But without this information, I have no fucking clue what to do, right? And I'm not in the business of sniping lows or sniping highs. I got a, well, it's not completely true. Wait, I got an example. Where was that? That was before my holiday. I took a long, I don't know if I can find that. No, there's no way. I took a long after a 5-wave structure was finished. Okay, wait, I'll just explain what I did. I remember the chart. We made a low, price moved up, price moved sideways, then price moved up again, and then eventually we came down. And this move down, right? So we basically moved up, we moved down. This move down counted as a 5-wave on the lower time frame. 1, 2, 3, 4, 5. Very clear wave 3. And if we have a very clear wave 3, and then we start ranging above support, right? I look for a final leg down, and I'm interested to long that final move. So that is my, I suppose that's my I snipe the low type of setup. Let me show this how it works on a chart. Wait, I can actually just use the recent low here. So, right, we have price ranging, right? A lot of overlap. Price falls down. That would be your 3. And then we start grinding here again, right? So you have your 4, 5, 4, 5 type of move. So the moment in an impulse you start moving into 4, 5s, I get interested to trade the opposite direction. So you have 1, 2, 3, 4, 5. And if this 3 ends just above support and we get a wave 4, I am interested to long or look to long a wave 5. Sometimes my stop loss might be a bit bigger just to make sure that, you know, I don't get stopped by a bigger wave 5. But if you have a clear impulse and you start ranging above a support or just below a resistance, it's very likely your wave 5 is going to reject at that area, which makes me interested. But in this case, in this particular scenario, right, 1, 2, 3, 4, 5, being more patient, wait for a move up. This is where the decision is made. Entry might be worse, but you do have more probabilities on your side, right? And what we play is a probabilities game, right? We play a game of probabilities. So we don't play a game of profit and loss. We play a game of probabilities, and the probabilities will get you the profit or get you the loss, right? If you know your win rate and you know your average risk-to-reward ratio, you'll know if your strategy is profitable. Yes or no? Okay. So lots of chatting. I'll do a little summary at the end again. Yeah, this is the same as the WXY. So let me remove this one. I prefer this one anyway. So that is that. Okay, so in summary, including what I am personally looking for, right? Nice little addition in today's live stream, I suppose. Wait, first of all, in the previous video / live stream, like not this morning, but the past few days, probabilities were higher to take out the highs. Price moved up, took out the highs. Explained that if we move back inside this range, and this is confirmed as a 3-wave structure by price moving up back in the range, I'm interested to long. So you can imagine what I did. Now, then over here, I have no interest in trying to short the tippy-toppy, right? We didn't even hit my resistance box here as well. We did have bearish CVD divergences, right? But that is more risk management for my long compared to trying to enter a new short for me. Because I don't yet know fully what's going on at that moment in time. However, from an Elliott wave point of view, this morning I shared this. So yes, the probabilities were higher to look for a retracement. Would have been nice to actually hit resistance, but you know, sometimes you get it, sometimes you don't. But nonetheless, probabilities were higher to move down, risk managed, right? Expecting a retracement. Get the retracement. Now we wait to see if this is a 5-wave impulse or a 3-wave corrective structure. If this turns into a 5-wave impulse, 1, 2, 3, 4, 5, then the second question you ask yourself, does wave 5 take out this low? Yes or no? If price ends a 5-wave impulse by taking out this low on top of this support, right? Then the messy chart. Then the move towards the upside decides probabilities for taking the high or go down to, well, lower levels, 76K potentially. In other words, take out this low, 1, 2, 3, 4, 5. I could, if we do get a nice wave 3 here and then corrective range in 4, I would look for another move down. And yeah, I would be interested in longing here if we do get a nice 4, right? So I would be, that would be an early entry. But if not, right, maybe I'm asleep. Who knows if we hit support. If you do end wave 5 here, right, then the next move up is going to decide my long or short. If this is impulsive, 1, 2, 3, 4, 5, I am not part of this move. If a nice impulse, I wait for a 3-wave corrective structure that is pretty much confirmed, right? So a 3-wave move, price moves back up, takes out that high, for example. I am interested to join, right? Looking for upside. Why? I'm looking at least for price to take out this high. I just risk manage when it hits resistance, maybe take out that high, hit resistance, maybe 93K, right? And I just take it level by level. If, however, we finish here a 5-wave structure and this move up is corrective, like a zigzag, right? Guess what? I'm short, yo. I have no interest in a long. I'm gonna do, I'm looking for price to move towards the downside in that case. If price, right, so that's one. If price finishes a 5-wave structure here, which does not take out this low, the probabilities are higher that this is either a wave A or a wave 1. Not a wave C, because A, B, C would be a running flat, as C here does not take out the low of A. Running flat, very rare, never preferred, unless everything else fails. That's just Elliott wave probabilities, so you immediately think about an A or 1. Now, that doesn't mean I'm shorting in the low, right? 1, 2, 3, 4, 5. I have no interest to short at that moment in time. No, I wait for a retracement. I wait for a corrective move up, right? I'm looking for a correction. And then I short the correction. Give me the correction. Let price come to me. If it is corrective, I'll join, right? If I am not sure what's forming here, is it impulsive? Is it corrective? I do nothing. If I miss the move, I'm happy because no trade is also a trade. And I prefer to take no trade when I'm not sure and save the money for a next setup than entering a setup that I'm not sure about, right? So that's something with regards to psychology. I also recommend you in your journal, you write down your psychology whenever you enter a trade, your thinking, right? You can learn a lot from that. Okay. Now that is if this price movement to the downside turns out a 5-waver. If this is a 5-waver, we are either looking for the blue dotted line, but then you want preferably to take out this low. Blue dotted line would result in a bigger double zigzag. If, however, this is impulsive and we get a corrective move towards the upside, we're going to consider a finish WXY and price to fall through support 76K is an option then, no? Now, these are scenarios where this is a 5-wave. At the moment, we don't yet know because we have a 3-wave structure down. For a 5-wave structure, we still need another 4 and another 5. So, if this turns into a 3-wave, of course, I'm interested to long. What do I want to see? Well, a bearish scenario is oopsie daisy. Bearish, 1, 2, 3, 4, 5, correction, continuation. Bullish, 3-wave structure. Bearish, 1, 2, 1, 2, 3. Rare target for 2, 886. Okay, so if price now moves up and touches the 886 at 86.2K, it almost confirms to me that this is a 3-wave structure, not a 5-wave structure, right? At least not an impulsive structure. So for a 1, 2, 1, 2, wave 2, 886, very rare. So if you move to the 886 here and retrace most of the move down, probabilities are low, you're looking at an impulsive structure. Multi 1, 2 is also an impulsive structure, which means that I get interest to long, right? Either at the 886 or wait for another rejection, right? Entry, and then look for price to move up. But then I'm looking for price to move up, in other words, because if this is corrective, it's more interesting to look for upside. Well, and that is how I then consider entering. It's consideration of entering, because there is some more things that I look at, like CVD, market structure, other tools that I use, but I use Elliott waves as my foundation because it creates a directional bias. And if my bias, first of all, I need directional bias in order to decide if I want a long or short. And that's what Elliott waves gives me. And once my bias is set to either up or down, that is when I start considering my entry and planning my entry and executing my entry once my boxes are ticked, basically, right? So yeah, this move to the downside is at the moment important, right? From an Elliott wave point of view. So we just wait what this is gonna be. We were looking for price to move towards the downside as per the polylines. Got to move to the downside. Now we wait. Is it impulsive? Is it corrective? Yeah. The yogurt, you are correct. Yeah, I can imagine. The live streams are definitely not always beginner friendly. Let me put, basically the analysis was done there, but I can imagine that when I talk about patterns this quick, it's tricky to follow, right? Oh wait, but if a 5-wave structure is not taking out this low, then wait, it's a high probability AO1. If it does take out the low, we don't know. We got to wait for corrective. There's a lot that comes into play, but that's also how to trade Elliott waves. First you learn the theory. If you want, I can recommend you some public sources as well to learn the theory. Also check the LINKTREE. It's also linked in the LINKTREE public sources. Also I'm not affiliated to the Elliott wave website, right? It's a great page. I actually think so. If I go to the LINKTREE, that one here, Elliott wave website, I really enjoy this website. When I studied, I visited this website all the time, so I recommend this one. But yeah, it's a lot to take in. But it also shows the thought process of trading Elliott waves on relatively low time frames, right? We're talking about a 1 hour, 15-minute type of time frame. And you have all these. So first of all, you have the theory. From theory, you got to get into implementation, which is a big step, right? Because in theory, the patterns are always perfect. When you implement things on a chart, you'll notice that, what the fuck, right? Where is my impulse? Where's my zigzag? Why is this a WXY? You know what I mean? So things are more complex in a real life chart. And if you don't know what's going on a 1 hour time frame, you either go to a 4 hour or a 15-minute and try to get clarity there, right? Always try to pick your battles. Know what time frames you want to trade. If for example, the daily, right? If the daily is not clear, we don't really know what's happening on a daily. Cool, I'll jump to a 4 hour, 1 hour, and I'll just trade the 1 hour, 4 hour. And then once the daily is clear again, I'll trade the daily. So you pick your battles. But yeah, you go to implementation. You learn a lot by implementing because it's tricky. Then once you implement your knowledge, you're basically training your knowledge with a live chart or historical charts, of course. After implementation, right? You get to the next level, which is probabilities. You don't immediately know how to trade everything, but the next stage is knowing probabilities. Because now that you're able to implement your knowledge, you need to get to a certain implementation level to know probabilities. So, hey, if this or that, then probability is higher for this or that, right? You got to know how probabilities change, what the probabilities are. So my probabilities were higher to look for a retracement. How do I know this, right? I mean, of course it happened, so that's nice. But still, why are they higher? And that's the implementation factor. You'll get there. And then after you get to the probabilities, that's when you get to trading. And everyone might trade. People trade Elliott waves differently, I suppose. I don't think everyone does the same thing. Maybe not the same thing as me as well, of course. Everyone's different. And also, I use Elliott waves as directional bias. I also trade Elliott waves as pure as it is. But I also have CVD, right? I love CVD. CVD is such an awesome tool. So of course I also make use of CVD and some other tools like my support and resistance boxes play an important role, right? So yeah, it's a lot, but I guess in a way with live streams and talking about how or why I enter, maybe it can give people maybe it helps people in a way to understand how to execute on Elliott waves. And sometimes the RR is going to be amazing, and sometimes it's not great, right? So I entered my long, I don't know exactly, right? Somewhere over here. I don't even have my trading window open. I already risk managed everything, and then I just close it down. But I entered my long, right? So cool. And then as price was moving up, this morning I woke up, probabilities higher for a retracement, and then we found some bearish CVD. So naturally I'm taking a take profit 1 because I don't want to get wrecked, right? Just in case, because from a polyline perspective, there are scenarios where we just continue. So I just want to be safe, right? One of my biggest strengths that in my personal opinion, but that's just, I know my trading, is finding new opportunities. So I don't mind taking a TP1, getting stopped on the remaining order, which is then break even. It's still a profitable trade. I look for the next one because I know there's going to be a next one. I don't care. But I want to be part of the move because now we know we got a retracement here. But what if I woke up this morning and we just kept pumping, and we were over here? Then out of nowhere, we're talking about a 1 to 3, 1 to 4, 1 to 5R, right? Now, this morning, I wake up, price moves down, bearish CVD, probability is higher for retracement, 1 to 1, 1 to 0.5R, still profit, right? Every trade is different. I don't need to get a 110R, 15R every trade. I need profit every trade. That's what I'm looking for. And occasionally, I get to 1 to 10. Occasionally, I get to 1 to 0.5 or the 0.3 even, or the 0.7 or the 1 to 1. But it's profit, which increases the win rate, lowers the amount of losses, which is good for my psychology because I hate losing. Who doesn't, I suppose? And I know that I can enter new trades, but at least I'm part of the move. And if we do continue pushing, right? If we do have like W, X, and we get a bigger A, B, and a C, right? Or we just get a wave 3 to the upside, hey, I just manage accordingly. I just manage the trade according to new information coming in. So, yeah, a lot of information. Let's see where we were. We were here. Lamison, welcome. Power Meet, what's up, Padawan? Mr. Amit, Sir Amit. Crazy Potato, how you enter trades. Pleasure, Crazy Potato. Elliott waves can be tricky to trade, but I believe that if you find it, anyone watching, if you find it difficult to trade Elliott waves, then I suggest taking a step back. Like if you're losing with Elliott waves, stop trading Elliott waves and focus on your implementation and your probabilities. And if you're watching a live stream, just ask me, right? Ask me. I'm here. It's like, I don't have to be your mentor or something, but while I'm here and hopefully, everyone has their own opinion, but I have a certain level in Elliott waves, which hopefully can be helpful to you, not just the analysis, but also how to approach certain market environments. Oops, that was my ring on the glass. So I'm able to help out or at least answer questions. So ask questions because maybe I can help out in some way. That's also what the live streams are for. It's not just the analysis; it's also the engagement, answering questions, helping people out, and hopefully it improves your trading, your knowledge. One for fitness. Yeah, I just came back from the gym. Yeah. It's cool to hear your thought process about your trading added to your analysis. Cheers, Sam. Yeah, I mean, if I would do this on a regular basis, then it would be live streams only. It's difficult to do this in a video because I don't have enough time. If my videos are going to be 20 minutes each, that's a problem because generally people watch the morning update during breakfast, during lunch, maybe during a short break at work. That's what I hear the most. And then, you know, the video can't be too long, but during live streams, I can explain more. So yeah, it might be something to consider with live streams. So a triangle is very possible. The total range, yes, it is. It is. So where's my... There it is. Let's see. Did we hit the 0.5 now? Yes, we did. So price did hit the common target area for at least a wave C, right? So there's always the potential for a C to be finished. And then you get a wave D and then a wave E, and then you go down, right? Now that, of course, means, however, that this is corrective. And then you get a corrective move towards the upside. So that is why if you do, of course, get a corrective move down, and then we get impulse, correction, right? Got to be aware of the potential of price doing, right? Not every trade is a winner, but that's just risk management. And by the time we have that information, we'll know how to manage it. That's, yeah. So no problemo. But yeah, triangle, yeah, it's definitely still an option here. Definitely still an option. So I do prefer to really look into triangles once you get to a wave D and start wave E. So I would need a bigger. Wait, I need to say this differently. I would like to see a bigger wave D instead of just a letter. A bigger wave D, right, in time and in price, and then get an E, right? So we like time. It needs time. It's Wednesday now. What is it? Yeah, no, it's Thursday. Wait, it's Thursday already. So tomorrow is Friday, which means only one day before the weekend. And generally the weekend is a ranging structure. So if we enter the weekend and we are still in this area, then likely during the weekend, we ain't going anywhere. I'm not really a big fan myself of trading during the weekend. I know from the past that generally I suck during the weekend for some reason. Maybe that is because I tend to do a lot of other stuff. I'm not really focused on work, on trading. I'm generally focused on doing things with my wife and activities and reading books and developing myself. And, you know, so it's, I don't know, maybe it has to do with that or maybe the market environment, but I do best during the week. So depending on where price is, if I am in a trade, sometimes during a weekend environment, I just close it and I'm like, I just wait and I wait for next week and new opportunities. So yeah, we gotta wait and see. Is there a minimum retracement after a triple zigzag? Well, a triple zigzag, if a triple zigzag is finished, unless it is a triangle, you expect the start of the triple zigzag to be taken. So if you get a triple zigzag in a wave C of a triangle, then of course you get a wave D, wave E, and then you wait, let me explain this in design, I suppose. So if you have a triple zigzag, you have your wave A, your wave B for a triangle. All right, so wait, let me do it like this. A, B, and then you have triple zigzag, W, X, Y, X, Z, right? This is your wave C. Then you have D, E down. Now, common target for D now is a triangle target, which basically means it's the 0.5 to the 786 for your D here. That's your common target area. So the triple zigzag here doesn't really add anything to the target area of your wave D afterwards. However, in any other structure, if you have a W, X, Y, X, Z, or the other way around, you would look for price to take out the origin of W. So, yes, imagine we have 1, 2, 3, 4, 5. That's our impulse. And then we get a W, X, Y, X, Z. Generally, a W, X, Y also channels quite nicely, right? Something to be aware of. And then we do this on the chart, W, X, Y, X, Z, right? Now, after a W, X, Y, X, Z, you always, except for triangle environments, want to see this taken out. You're always going to take out that high. Yeah. You can't do this anymore. WXYZ is like that's your maximum. You can have a flat, right? But then you still take out the high with a B most commonly. So a WXYZ, you expect this to be taken. If you label this as a wave 3, oops. If this is a 3 and this is your 4, you look for price to take the high and then get your 5, right? If this is a wave A, this is your B, you look for C. If this is W, this is X, you get a Y. Look for price to move up. You see what I mean? So yeah, a WXYZ can be a sub-degree count besides the triangle, right? So if you do get a WXYZ in a wave C of a triangle, you expect DE and it still, it still fills. So then you have A, B, C, D, E, A, B, C, D, E, toof, right? In the end, you still take it. Most commonly, wave C in a triangle is the complex wave. But yeah, in all other scenarios, if this is wave A of a flat, if this is a wave B of a flat, if this is a X in a WXY, if this is B in a zigzag, you look for the origin to be taken. A WXYZ, however, is incredibly rare. It is very rare, very rare. I've never really counted a WXYZ, or at least a high probability one. It's very unusual. I actually think in the book Elliott Wave Principle, they only saw it once or twice. I think they even wrote about it in the book. It's very low probabilities though. 25th of Jan, 20th. Yeah, probably not, because it's just low probabilities. So oops. So because of the probabilities of a triple zigzag, it's never going to be the highest probability. So this is your high, 25th of Jan. I mean, that's pretty much in the high. And then 20th of March. That's where we are now. So question is this a triple zigzag? I personally do not count this as a triple zigzag. Besides the fact probabilities are low. So triple zigzag, running flat, expanding diagonal, expanding triangle, all four of these, lowest probabilities. Very rare, never preferred, unless all the other structures fail. That's when you move into, for example, a WXYZ. So in other words, this move down for me is counted differently. And I would prefer counting this as a WXY, so a double zigzag, compared to a triple zigzag. Right? So then you still look for this in that case, right? So this is your wave Y. So you have your W, you get your X, A, B, C, and Y. So I always avoid the very rare structures because they are very rare, but if everything else fills, that's when they get into play. Same with the 11th of March. Yeah, you just mean the low. No problem, Werner. Legendario, what's up, man? How you doing? Cheers. One for fitness. Where do you get probabilities? 886 is rare for 1-2. That's studying. So the 886, by the way, that comes from me. You won't find it in the book. You won't find it anywhere else. That's something that people know from this channel. The 886 is something I've researched a lot in my Elliott Wave journey, and eventually started to share that on my streams and in my content. And it's great to see people using it. So the 886, there's more to the 886 than just a wave 2. You can use the 886 in many ways, but one of them is, for a wave 2 is very rare. Common target for 2 is 05786. You'll find that if you study Elliott waves, right? The 382 is also still a target for 2, little less common though. Generally 2 is a bit of a deeper retracement instead of so shallow. But the 886 is very rare. The 886 is more common for corrective structures like a B or an X, or triangles, triangle waves. Right? B, C, D, E can touch 886s. Yeah. I covered this one after the analysis. Hall speed, I'll probably get it more. Yeah. And if not, just ask questions or pop in Discord, pop a question there. Sam, your way of structuring the probabilities with if then is simply genius. I love it. Cheers, Sam, man. Yo, guys, you make me blush. Sam, you make me blush, man. Take it easy on me. I'm just an analyst. I'm I'm happy. I'm happy you guys find it valuable. But yeah, it's once you know the theory by heart, and of course you have a certain level of implementation, it goes very quick. You know, you'll improve very quick, and you'll notice. You know what to look for. You can like look in the future, and you know, okay, if this happens, then I look for this. I act like this. So you already. I already have my plans. I know what I need to do from an Elliott wave point of view, right? I am prepared. I basically shared it during the live stream. I shared what I am looking for here and how I would potentially execute based on what I'll see. But yeah, the if then, that's important for trading as well, because if you're in a trade and you get new information and it's like it's not going the way you wished or hoped it goes. You should never wish or hope, really. You should just read the chart and trade accordingly. But yeah, you got to change the plan. So if X, then Y. Yeah. Elliott waves without puffing about. Oh, we do a lot of puffing on this channel, yo. Yeah, sometimes we're doing live stream. It depends. It's mainly up to you guys. Where after I do my analysis, it's generally up to the chat to see where the conversation is going. It's already 8 p.m., so I got to go, though. But sometimes we are talking about travels. We're talking about motorbikes. We're talking about... we had oil factories once back in the day with someone living in the Middle East. Countries where people live. Politics, never politics, because you can better avoid politics. Cars, we've done video games, we've done hardware, we've done lots of stuff. And then once the conversation goes into a certain direction, and animes as well, I mean, we talk about a lot, but that's after the analysis. So at the beginning of the stream, it's hi, how you doing? A little bit of storytelling usually, then jump into the analysis. After the analysis, anything can happen. Questions about Elliott waves, or we go completely different directions. It happens. And then, once I gotta go, I gotta go. Very seed, I know you from Daywald. Amazing how you guys speak about Elliott waves. Yo, give my greetings to Daywald. Daywald is awesome. He's a YouTube content creator as well. He learned Elliott waves in my gold membership, which is always really cool. Really cool to see him flourish. So he was, I don't know, in gold for about a year. And then he studied everything as much as he could, really improved, started his channel, and look at him go. So it's great. Yeah, it makes me proud. It's great to see him. He's also a very nice guy. And that's, I think, what's most important. Now, just being a nice person, being friendly, being kind, being helpful, loving to share things. He's just a very good person. Could you recommend a book or article that compares all the problems against each other, for instance, the different kind of triangles? No, but we're creating one. There's not a book like that, I believe, but in the book that we're creating, which is the compendium, we do have a probabilities table. Yep. So we're working on it. But what you should know about triangles is the most common triangle is a contracting triangle or a running triangle. On the second spot, barrier triangle, and on the third and final spot, expanding triangle. What would you say is your probability of a winning trade? About 80%. Yep. But then, of course, winning trade. Sometimes my winning trade is a 0.5 R. Sometimes it's a 1 to 10 R. It just depends on the move that comes afterwards, and it's risk management. But I tend to have a high win rate. In a bad month, I'm usually around 50%. But in a good month, I'm around 80. And maybe if I should average in a year, I'm more like 65, 60, 70, 80. Yeah, between 50 and 80. I mean, what time frame do you take? 1 day, 1 week, 1 month, 1 year? But I'm in the, I wanted to say third quarter, like between 50 and 80, but mostly around 65, 70, 65. But 80 is, yeah, I mean, if I look back at my data, then it's relatively frequent I reach an 80. And that's also because I just hate losing. I prefer to have a little profit than losing a trade. I prefer to re-enter after a small TP1 and then I re-enter later, or I just completely miss it. I don't care, but I prefer to have the profit. So, you know, you can have, this is important actually, you can have a 90% win rate and be a losing trader. Because if your loss is outweighing all of your wins, I mean, you know, what the fuck you doing? Right? So you have a 90% win rate, but you suck. And you need to improve, right? You need to improve, collect data, make a better plan, check what tools you can use, maybe change the tools, and try to improve. Because I sucked in the beginning. I was really bad in trading. I was incredibly emotional as well, which was one of my biggest challenges, was managing emotion. And I was really bad. Now, by all means, I didn't have a 90% win rate. I sucked on all different fronts, right? But I got better because I improved myself. But you can have a very high win rate. Yeah, if you talk to someone and they say, yeah, I got a high win rate, it doesn't mean they actually make money. Because if you have a high win rate, but your loss is bigger than, oops, that's water. Luckily, my laptop is not on, it's not on my desk. Ooh. That's my notebook. Anyway, I have to go anyway soon, so I'll clean it up after. But, so yeah, you know, win rate doesn't tell anything. It doesn't tell you what kind of trader someone is. But then again, it's actually not important what kind of trader someone is. Sorry, I'm just managing my my shit here because I dropped the water. Luckily, I got a vest, so my vest here is going to be my my towel. Oops. So, in the end, what is most important, of course, is to control your own trading. Unrelated. So, in the beginning, when I started, I'm into storytelling now, but when I started back in the day, I was always looking at other people. How are they doing? What are they doing? How good are they? Like, what's their, you know, like trying to like, based on their content or their groups, I'm like, you know, wow, this person in this community seems to do very well. Why do I suck? You know what I mean? And in the end, I'm like, well, I don't even know. Like, this person is sharing all those percentage pictures, you know, like the profit and loss P&L photos that you can download from an exchange after you're in a trade. And in the beginning, I got influenced by that stuff. But in the end, I realized, like, why do I even care? I shouldn't care if that person is good or sucks. What I need to do is look at myself and improve my skills, right? So what do I need to do to become better? I don't want to copy someone else. I want to be Koen, right? So in the end, that's what I did. And therefore, in my community in Discord, or I should say our community, it's not even my community, it's our community. However, that's a personal choice, do not allow profit and loss pictures. Because what is a person trying to achieve sharing a profit and loss picture? It's just ego. Oh, look how good I am. But no one learns anything. No one knows anything. Maybe you try to snipe the low 10 times, lost 10 times, and then with your 11 trade, you actually managed to hit it with 1 cent risk. Wow, I mean, doesn't matter. So in our community, no P&L pictures are allowed. If the mods or I see it, we remove them immediately. And we do give a warning because it doesn't help anyone. And in the end, knowing someone else's win rate, knowing someone else's size, knowing someone else's P&L or risk-to-reward ratio, it's not going to help you out. What's going to help you out is focus inwards. What can I do? And that's where the 6 steps come in, right? The 6 steps to make a plan, which is shared in educational content. So this is a playlist on my channel, and then check out this video, right? It's interesting. These 2 videos are the 2 most important videos on my whole channel, and they're doing shit, but you know, maybe it's the thumbnail or the title, or I don't really know. But these 2 are actually the most important. So if you are watching and you do still have 15 minutes to share in a few seconds, I do recommend watching these two. And hopefully they'll help you out in your trading. Okay, it's time. I can hear it's time for me to move, so I'm gonna scroll. So we're making this. I answered this. If we see, can we count it in? If we are in wave C as a correction, how can we count it as ending diagonal? At the moment I'm not counting any diagonal here on the lower time frame, right? If you want to get a diagonal, then you need 2, right? So it's way too early to talk diagonals. If we pleasure guys. Our probability move towards a finish 3 waver when we hover here longer. Well, you can still get a wave 4, Sam, right? So of course 1, 2, right? So you then have W, X, Y. Very deep X though. Like that's the thing. Very, very deep. But yeah, this here, right? That's your wave 4, or you're starting to build some support for an impulsive structure. But actually, I would like to touch the support here, 83.2. We'll see. We'll see if price can reach it. But if you range here for a longer period of time, remember you can also just count as a 4 and a 5. So gotta wait. You know, a lot of patience. What's so important on March 25th? Nothing, I think, or 28, 26. I don't have anything important on March 25th, but there was a question about a triple zigzag from the all-time high to, I think, March 25th, but it turned out to be the 11th. Where the ratio to the size of different wave fits. How can I best recognize the wave level stage of the individual waves? Well, if the minimum size is reached, which generally, of course, is the 3A2, you got to take a count really into account, right? So you got to be aware of it. You can't remove it. If a second wave, right, a B, an X, a 2, whatever, is finishing before the 3A2 FIB time, then generally, you don't necessarily have to remove it from the folders. It just has very low probability. So with regards to ratio time, right, ratio analysis, time is not invalidating, but time is also not confirming. Time has an impact on probabilities, but mainly if something finishes before the 3A2 or after a 5 or 6 FIB time. Everything in between, you got to be aware of the scenario. No, Koens is not my real name. It's Koen without a Z. That's my real name. The Z has a special story to it, but that's for another time, I suppose. XU just cheers, XU. So keep an eye on the 3A2, keep an eye on the 5-6 FIB time. Everything in between is okay. Of course, generally you prefer a wave 2 to be short, right? Between a 3A2 and a 2 FIB time is nice for a wave 2. But a wave 2 going to a 3 FIB time or maybe even a 4, it starts to be long, but it's not an invalidation. If you do pass the 6, though, that's the moment where I'd be like, okay, I'm looking for the other direction now. I don't want to see a wave 2 pass a 6 FIB time of wave 1. Ratio 100 on 1. Daniel, yo, what's up, man? How you doing? I always loved the Trunks Rage picture. That was such a good episode. Staying stone cold is probably a good trade in the market. Yes, good win rate with good R is the thing everyone trying to pursue. Correct. But every trade, every trade will be different. Sometimes your RR is going to be 1 to 0.5 and you make a 0.5% risk. But hey, can we be mad? Right? But sometimes you enter the exact same trade and it's a 1 to 10 because price continues pushing. So it's about the management after. And then the average RR, of course, should be good compared to your win rate, right? Those two are always synced to one another. So there's a good is a good time to close the position. Yeah, I know, right? Yeah. I've been in those groups. I'm not a fan of that stuff. Okay, guys, I gotta go. His real name is Alfred. Alfred Adokus Kwak. Is that the same for other countries? where did I get this from? Alfred Kwok. Oh, here. Yeah. Alfred Jodokus Kwok. Yeah. Wow. My child brain, yo. Wait, let me share this. Yeah. I immediately had to think about this one. This is the duck. Anyway. This is the moment we got to stop the stream and do something else. Okay, thanks for being here. You know what I'm looking for from an Elliott wave point of view. You also probably know what I'm looking for with regards to potential Elliott wave trades. Now, of course, make sure you have your own plan, your own strategy, your own tools. I have some additional tools besides Elliott waves as well that I use for my trading, but at least sharing some insights. Could do that more often during live streams. Actually, pretty fun. So yeah, trade safe. And if you're a Formula One fan, tomorrow, early morning, we have a sprint race. Do not forget. We should do like Formula One stream stuff in Discord, right? Like watch-alongs or something. Yeah, it could be fun. But thanks for being here. Thanks for popping in. Tomorrow is a new day, new probabilities, new waves. Let's see what we get. So trade safe. See you tomorrow.